Good afternoon, everyone. BC Richfield here, coming to you live from London. Just got a couple of minutes past midday, which makes it just gone 11 o'clock UTC. Big shout out to everybody joining the stream today and everybody watching this on catch up as well. See some friendly faces here as well and some new as well. Craig, good morning, guys. Ilcho, welcome. Gio and Touche, my brother from over at Dank CC Club as well. I hope you're doing well, guys. We are going to keep our focus on a bit of education today on Monday. Obviously, if you guys have got any real pressing kind of charts or bits and pieces you want to look at or discuss, do let us know and we'll make a little bit of time for that at the end. So again, I thought I'd just kind of look to start with my kind of weekly context. So on a Sunday evening, I sit down, I write the Bitcoin report for the Bird Nest, and I really, really like doing that, actually. A lot of people say, isn't it kind of a bit of a pain in the ass doing it on a Sunday evening and stuff like that? But actually, I find it really, really sets you up well for the week, right? You have a really good understanding, clear bias. You come to the charts, you start, for me personally, I start just before the London Open on the stock exchange. And then I like to see how the traditional markets start playing out. And then I typically target trading the New York session, which the key time for me is looking kind of around about 1:30. That's British time, which at the moment we're UTC +1. And then you get this lovely kind of injection of volume and volatility, typically between the London crossover and then the New York Open. I always find that's a really, really good time to trade as well. James, 14, good morning, mate. And Nit, good morning. You did make it indeed, mate. Very, very welcome to all. So I don't know what you guys want to kind of look at today. I really wanted to kind of build out on this kind of idea of liquidity. I think one of the main things that I get asked as a full-time trader is how you're kind of gaining bias, right? So I think bias is really, really important. Execution is obviously another factor. But then kind of managing ourselves through it. And actually, I had a really interesting situation last week, and I'd love to kind of share my fails with you guys as well. First of all, it gives me accountability for them. And secondly, I find that I learn a lot more from it. Ahmed, good morning, my friend. So what do I mean by fails? Not really a fail, but actually an execution mistake on my part. So I've been doing a lot more traditional market trading, which involves a lot of foreign currency. And I had some really, really tight TA set up. Seb, morning, brother. I had some really tight setup actually on Euro GBP, and it was very, very clean price action. And I kind of, I ended up kind of front running myself and rushing myself into this trade. And when I reviewed it over the weekend in my journal and asked myself kind of why I did it, I got in on the secondary part of the trade, which was really good. So made up for the loss. But ultimately, I wanted to understand why I made the mistake and went in without kind of a clean trigger. Now, the PA on the lower timeframes was a little bit choppy. We had a lot of kind of volatility coming in. But I realized that actually what I was doing was I was working on another project for the Bird Nest, right, which is really, really good, really exciting to tell you all about that in due course. But then I was also trading crypto markets. I'm very, very fortunate to manage the team of incredible analysts that we have here at the Nest as well. So you kind of work with that. And I realized that I just kind of got myself a little bit distracted, really. And, you know, I think I have to be overcritical of myself for that, because as somebody that teaches other traders as well, it's really, really important to take ownership for that, right? So for me, I was looking at that and I said to myself, look, you've got the TA there, you've got that, but you've rushed yourself into making that trade, and that is an amateur thing to do. So in the journal, sat down, noted that up, that I kind of, was forcing myself into this move because I was so confident in the price action, right, that it built in a little bit of complacency. I saw this initial move. I thought, right, brilliant, this is it. I'm in here, went away. Stop loss got triggered. Basically, I'd allowed myself to get in before the main sweep had happened. Fine, happy that I got in afterwards and recovered a losing trade. But it's really, really important to kind of mention those as well. Ray Valentine, morning all. Touche sent me. That is an absolute blessing, that is, from that guy. So thank you very much, Touche, and very much welcome to Ray. Erica, greetings from Dracula Land. Oh, wonderful. Sounds very mysterious. I'm thinking, getting Vlad the Impaler kind of vibes. Craig, looking at secondary retests and getting in on the second leg. Yeah, like we're seeing at the moment. Exactly. So it's all about having the high time frame to frame the trade is one thing, but then understanding the parameters for entry are another, right? So that's something that I want to look at a bit today. And actually what I've done is I've just left all of my TA on the chart from the Bitcoin report. So I thought, it might be interesting to show how I kind of get into this thought process and how I start with a weekly, work my way down, build the bias, and then what I want to see when I'm looking to execute, because actually the high time frame bias for me is very much based around price movement. Whether we're taking highs, we're looking to rebalance fair value gaps, and then the low time frame, and even on this one, the 4 hour, where the mother bars come into play, our key levels, and then we just add these points together for confluence. And that's what kind of leads us to our overall bias. So let me just turn off our inside bar quickly. Turn off our daily levels as well. Pop our weekly levels on. And then we're just going to pop out to our higher time frame view. And let's just have a very quick look at this. Yakuza Cardo, good morning, my friend. Yeah, Romania, beautiful country. Actually, I was very, very fortunate to travel there when I was younger, and I thought it was just an absolutely stunning place. Magnificent wilderness, lovely people, and a really, really kind culture. I actually showed my age off a little bit because it was also a similar time that I travelled to Yugoslavia. Yeah, definitely showing my age there. Right, so actually, let me just minimise these crosses just so that we are nice and clean. Right, so weekly time frame. For me, I think this is always a really, really good time frame to start on. This is the kind of mother of the higher time frames for me when it comes to crypto. Typically, sometimes I will draw out to look at kind of like a monthly level, especially things like the monthly open and the quarterly as well. But for the sake of this, what I'm looking at this for is I'm asking myself where price is being drawn to. Okay, so I'm looking for what I would consider like a price magnet. And in my world, I like to keep things incredibly simple. So for me, price is either gravitating towards liquidity. And by liquidity, I'm talking about untapped highs and lows where we believe that there's stop losses resting, right? So whenever we get to one of those levels, we monitor for a reaction. So my initial thought is that we get some kind of deviation or some kind of swing fail, price steps back within, and then we look for expansion higher for a bullish example. Just to give that a bit of chart context for you guys. We're looking at something like this, for example. Right, so what do we get here? Let's just do this in red. So here we can see ultimately price breaks down and sets this clean low, right? Now, while we're bearish, and we have to respect the time frame we're on, if I'm bearish, then typically I'm just looking for short trades, right? So when we come and set this low, when this candle closes here, yeah, what it gives us here is this fair value gap, right? Now, this principle remains the same for me on any time frame. Yeah, if I was drawing this in, then I would just label it so we know that it's weekly. And the thought process is this: the price is going to be drawn to rebalance this, yeah, and then ultimately continue its bearish trend, right? Because we've got to remember we're still in the bearish trend, lower lows, lower highs, down to the next resting liquidity, right? So what we've done is we've established that we're in a downtrend, yeah. We found an inefficiency here with a theory that price comes back to rebalance this and then sells off lower, right? And I would count that, by the way, as this test here when price comes into here. Yeah. Why? Because we enter the fair value gap, take out liquidity from the prior 2 weeks highs, and then we would target the low of that week, right? And we'll look at that as we drop down onto the daily as well. We have a similar situation here as well, where we have a sweep of the prior week's liquidity, yeah? So we would be ultimately looking for a breakdown towards the prior week's low. And then our third one is here. All right. And then when we break down here, I know a lot of people kind of get confused by this in terms of target setting. When we break down here, if we lose the prior week's low here and we continue down, when this candle closes here, there's a couple of really key things for me. One is that we've got this liquidity resting here, right? Under those not quite equal lows, but relative equal lows. Something stopped the market there, so we would expect some kind of reaction. Price runs up to here. Now, when this starts to break down, right, and we close this candle, as we did with this move, remember, bearish trend, we look for a bearish fair value gap to be rebalanced, and then for continuation lower, right? We then get another situation here, right, with this weekly fair value gap. So let's just draw that one in as well. Now, what do we see here? Price comes down, right? And ultimately it takes out this low. Now, what is this? This is what would be known as our internal range liquidity, right? And for bits and pieces like this, I was very fortunate to be an early stage student of ICT in his original mentorship and learned a lot from SZ as well. But in terms of some of the terminology, if you don't understand it or if I'm abbreviating too much, do let me know and I'll always put you in touch with the source. I'll teach you how I use these methods, but I'll always tell you where the source is as well so you can do your own research into it and really gain that deep understanding, all right? So as we said here, right, we're bearish. What do we want to see respected here? This order block? Yeah, so if price had come up earlier into this, we would look at that. But ultimately, it didn't. It kept going down and we left this fair value gap. So our theory is price pulls back into this fair value gap and we look for shorts in here. When do we stop looking for shorts? We stop looking for shorts when we violate the fair value gap and flip it from resistance to support, right? Which we can see didn't happen here, but it did happen here, right? Which we'll cover shortly. Okay, so now our theory remains the same, right? We've come down and fine, we've taken out the liquidity here. But if I'm thinking like an institution, if I'm thinking like a major player here, where am I going to have my stop loss? Where am I going to be looking to push the market? Well, here's the low. We've interacted with this a few times. If I want to go long from here, the chances are that a lot of other people are also going to jump on that bandwagon, right? So what do I need if I've got huge sums of money that I want to invest in this market and I don't want to suffer slippage and I don't want to give my position away too early? I want to send the market in the wrong direction, right? Meaning that I want to target the key liquidity. Now for me, and let me just make this a thinner line because I would do with this being internal liquidity. This is external liquidity, meaning for me, this is the clear and obvious level, right? So if I was institutional money, and I had large orders to fill, I'd want to target this liquidity here because all the stop losses under here are buy orders, right? So a sell order. So you've got people here that have gone long, right? Their stop loss becomes a sell order. Fine, no problem. What else happens here with breakout traders and algorithms that are targeting levels here? They also open sell positions, right? Now, if I'm a major player that really, really wants to place a lot of long orders here, I need to create a lot of sell orders. And these sell orders created below here ultimately then get filled by the major players. And these are how we get our market reversals, right? But we don't want to do anything until we have confirmation. So as we're here, we've still got key liquidity resting below. We've got a new fair value gap, right? So we would ultimately be targeting this for continuation lower, right? Once again, we sweep the prior week's high. We're up in our weekly fair value gap. That provides our targets. Now, it doesn't mean that it provides our entries, nor does it mean that we would really, really think that we're going to get an entry. We don't ever want to have that arrogance or that ignorance about us, right? We'll see as we get on the lower time frames, we get a lot more noise, right? So picking our entry points becomes really, really key. By the way, good morning, Super Shogun. Great to see you on that, and Django Blue as well. So before I waffle on too much about this, at the end of the day, the reason that I still had a short bias here was because we had this liquidity resting down here that seemed clear and obvious for a target. Now, if we want to look at what a reversal looks like in this situation, what we were monitoring for up here, yeah, remember what we said? We said, fine, if price had continued up to here, violated the fair value gap, come back and retested it and moved away, that's when we'd have more confidence about us that we're looking at a reversal. Ultimately, we didn't get that, but we did here, right? Now, I do these ones in purple only when they've been flipped. Yeah, so think of it like a support and resistance. What have we done? We've run liquidity. We've left a bearish fair value gap, right? Now, naturally, with targets lower down, when price rebalances or looks to rebalance this, yeah, that's where we'd look to go short. However, the moment we get this move and we close above this, yeah, then all of a sudden our bias is flipping and we start to look to this area, any retest of this area for long trades, okay? So this is what the difference is between seeing this. So basically what I'm looking for is confirmation, right? I want the market to tell me when it's ready to move in a specific direction, yeah? And then we can go and hunt on the lower time frame. So let's just look at those couple of examples quickly, even just by dropping onto a daily chart. Now, if we use the same principles here, yeah, that we just discussed, and we'll do these in backwards order so that we give the trading view a little bit of time to catch up. I think maybe I just have so much old test data on this now. I think I need to clear it up because it's been getting a little bit slow. But look at what we said before, right? Like we were looking on our weekly view, we don't need to change that for the daily. That's what I don't want to do, yeah? What I want to do is retain that weekly view and say the same thing, right? Now, if we're bearish here on a daily scale, which we are, yeah, and let's just look at some examples here. When we come up from here, break down, small fair value gap in here, price draws into this, breaks down further, another fair value gap here, leaving liquidity resting lower, right? And ultimately, we've got our target down here to invert this fair value gap. What happens? Price breaks down again, leaving the inefficiency. Zoom in a little bit so you guys can see that clearer, yeah? Leaves this inefficiency here, which we tap into here, and then we go lower. So now we've engaged with our primary target, right, or our point of interest, which is this high time frame, our weekly inverted fair value gap. We now have two things to consider. As we did before, price either runs through this pretty carefree, in which case we wouldn't give it any validity, we would continue looking for shorts, or we want to see a fairly strong reaction here. And something that kind of always sticks out to me here is using the same principle. We can see, look, bearish fair value gap. Look how little respect was shown to that when price broke through it, yeah? Leaving a bullish fair value gap, meaning that from here, our assumption is that price is seeking liquidity higher. Where's that going to be? Above old highs, yeah, with untapped liquidity resting, especially this one, which are equal highs. So that would have been our key target, right? And then what we're looking for as we move up is we want to see our bullish candles respected, yeah, and then the bearish candles violated. So in the same vein, bullish fair value gap here, respected, bullish order block respected, bullish fair value gap respected, bullish order block respected, bullish fair value gap respected. Okay, we see as we go up and up and up. Then all of a sudden we get up to here, right? And then we set this order block, right? So we see this down candle before price moving away. So the same as we did here, right? And we're going to... Oh, hang on. Sorry, keep doing that. Hit my space bar. Let's just see if it will take us back to Bitcoin. Here we go. Give it a few seconds, guys, and that will load up. So basically, what I'm saying here, in terms of how we're managing this process moving forward and how we're controlling our bias, is we don't want to just think, okay, we're in an uptrend, let's just keep longing everything. We can look for points of interest for reactions, right? So for me, I like to make them fair value gaps, order blocks, right? Untapped highs and lows. If we monitor those areas, what we want to be able to do is have an understanding of our high time frame bias and then be able to execute, right? So if I'm focusing on the bodies here, we can see what we have here is our order block, which gets respected here, okay? Now, when we leave this order block here, just wait while that catches up for a second. So we see we've left this order block. Price has an aggressive move away from it on the lower time frames. We can hunt for long positions there because we see this is being respected. If this was being violated, yeah, price was coming down, or if this wasn't being respected, then we would look for a deeper drawdown into these fair value gaps lower, okay? But the fact that we're holding this means that it is overall bullish, yeah? This fair value gap here. Now, you might say, okay, well, it doesn't look like it's being massively respected, that one, but actually, if we go on this, right, and we draw in the fair value gap down here. Now, I'm not making an allowance for the wick above because we haven't got a fair value gap after it, right? But ultimately, even if I draw it across to here, we can see that this is kind of holding the market up here, this order block. Price draws into it, stays long, draws into it, stays long. If we got a close below this, yeah, and a draw into this fair value gap, we would then start to look and consider moves lower. But overall, we're respecting this, yeah, and price is continuing to move up. Now, the first sign that we're going to get a reversal in here is if we're doing the same, yeah, and actually let me just draw in the whole order block so we can see this. Yeah, so when we come in, we set this down close candle. Now we see price move away and it gets respected, yeah? So in this instance, when price draws down into here, on the lower time frames, we can look for long setups as long as we've got a clear liquidity target above, which in this case we have because we've got this untapped swing high. However, as the same theory exists with our fair value gaps, does with our order blocks, we can see how quickly we lose this, right? So see how quickly and how aggressively price punches below. Hey, Ricky. Hey, bud. So then our theory with this one's become compromised, right? Because the bullish order block isn't supporting price anymore. So ultimately we say to ourselves, okay, well, what's been created here is a bearish order block, right? So if we just draw that across and we say to ourselves, okay, well, if we've now got this bearish order block in play, what happens? Price moves away again, comes down into here. What's the other key thing that kind of leads us in here, as we were just discussing, was the idea that we'd be monitoring this fair value gap, right, on a daily scale. Let me just draw that in. There we go. So this is our daily FVGD. So we expect price if we're bullish, right? So we've lost the order block, fine. But now price is pulling down into the fair value gap below, yeah? And if we don't get a bullish reaction here, price ultimately then just continues to break down, right? That means that now we've moved into this. We're looking for the bearish, order block to reject price. So then when price returns here, we get this attempt here, we short it, price returns again, short it again. And then on the way down, all we're doing is showing respect as this is here. So we've got this order block here. We can see respect is held. Ultimately, once we've then broken down and we set a new bearish array, or like a bearish point of interest, in this case, this fair value gap, we ultimately see it's respected again, price sells off again. All right. So until we get to the point that we then reverse that, that's when we can then start shifting our bias. Now, on a daily scale, this all looks quite close, right? But you're talking about this information here going back to March. Yeah, so you can see how long you can keep these biases intact. So, all being good and all being said, fine, but where does it leave us at the moment? This level's really, really key for me here, this high. So for me, this is what's really capping the market at the moment. We've had all these attempts, look at all these wicks, deviation, price sells off lower, right? Price comes up, price sells off lower. Okay, James, yeah, good question. So difference between an order block and a fair value gap. So with a fair value gap, let me show you in this example here, actually, one we've already got marked up. So a fair value, an order block, yeah, we're looking at this as an up candle. Yeah. So if we want a bearish order block, this is where the confusion comes in sometimes, I think, right? So if we're looking for a bearish order block, it's actually a bullish candle. We're looking for the last real kind of up candle here before price has an impulse move away. Yeah. Now, we can also mark these up before we get that impulse move just as an area to monitor, right? But they're not valid until we actually have the parameters that we need. But ideally, you want to see some level of support or resistance. In this case, we've got resistance here. We can see price heading up, unable to make it past this level. We then get this order block, this up candle. Yeah, so think about this is where buyers stepped in, were ultimately wrong, and then price has driven away. Yeah. Now, there's a couple of thoughts on this, meaning that if this is where the buyers were, there might be buyers trapped in here, meaning that when they return, they could be institutional buyers, especially with large account positions, could be very, very interested to shut those positions out to avoid any further loss, right? To get out of break even or as close as. Henceforth, they come here, close those positions off and move away. The other theory supporting it is the fact that if this was the last up candle where people were considering going long, but the market reversed here, then people that could have been bullish here, if we return, will almost certainly be looking at this for some kind of support and resistance flip. Yeah. So this in an ideal world would have been a bullish expansion. There would have been a retest of this area and price would have found continuation. However, we had the bullish move, price sold off, retested. So now we favor this position for shorts. So an order block, yeah, is that. A bearish one is the last up candle at resistance with price moving away. A bullish order block, yeah, is the last down candle at support before price moves higher. All right. Now, a fair value gap is different to this. This is an inefficiency in price delivery. All right. Excuse me. So, an inefficiency in price delivery means that, see this move here? Well, actually, look at these moves in here. Yeah. Look at, apart from this small fair value gap here, which is rebalanced here and here, look at how the bodies and the wicks all cross one another here. There's no gaps, right? It means that it's moving in an efficient manner. Now, when there's a failure to pair the orders together, you get these voids, the price moves up incredibly quickly or down incredibly quickly, we get these gaps. Yeah. And you don't see it as much in crypto, you see it more in traditional markets, you get volume imbalances as well, which is where you have like a gap like this and the wicks overlay, but you don't actually have any bodies there at all right? Now, the best way to think of it is look for your order blocks at points of support and resistance, yeah, and look for your fair value gaps in the trends that are taking you between them. So let's say we have a very clear level here. Let's imagine that stems back to there, and then we're in this consolidation here, right? Well, we could look at this down candle here, right, into support before price moves away and breaks structure, yeah. So then, if we're looking at that, we could say to ourselves, all right, well, if this is our bullish order block here, then what we're looking for here is for this to act as support. We also have this bullish fair value gap in here, a very thin one, but you'll also notice, and let me draw it in for you so it's nice and clear as well. And guys, if any of this is too small or you want me to make it bigger at all, please just let me know. Right, so we can see straight away we're building confluence, meaning that we've got our bullish order block, price has moved away, yeah, not a huge expansion, but it did move away, leaving a fair value gap, showing that the buyers are stepping in here, right? Showing that we've got that displacement. We've taken out this high, so now we'd like to see price retest this order block and respect it, which it does. Yeah, it even respects the equilibrium of this beautifully, and then it's respecting the fair value gap as well, which holds here, meaning that while that's happening and we're respecting our bullish high time frame, then we can look on the lower time frame for longs. Yeah. And obviously it's not something that's always going to work out, but if we're trading with the trend, it gives us, the likelihood is that we're trading with the main order flow and that the likelihood for success is higher. All right. Superb. Yeah, you're welcome. Well, there's breakers as well, right, which I'll cover in some other episodes, but it's, what I would do is give it extra validity as well if you have a fair value gap after it. The market moves with impulse, just adds a little bit of extra weight to the order block. So with where we are at the moment, and let's have a look, just need to extend these weekly levels out a little bit. Just do that very quickly. So is this making sense to everyone so far, by the way? Because don't be shy to ask questions or ask me to either describe it a little bit clearer if I'm not being overly clear or, give some other examples. Please don't hesitate. Just pop it in the chat and we'll take a deeper look. So current price action, what you can see on Bitcoin at the moment and what is really, really obvious is that we're just still compressing in this tiny range here. Yeah. Which we look at on the lower time frame. We've got our order block. Yeah. Thanks, Craigie boy. So we've got our order block. That's what's keeping us in there. We've got a couple of overlaying inside bar patterns that are compressing price as well. So ultimately, we're not really getting a clear read on the higher time frames. Yeah. My thoughts, if I had to make a decision on this, which I said in the report last night, is that the fact that price is meeting so much resistance here and failing to get that move makes me think two things. One, when we do get the move, I think it will be fairly big because we've had such protracted consolidation, right? Meaning that like a spring, this thing's been really coiled up tight. When it pings, it can go pretty big. But what else? What would I want to see, basically? So exactly the same as we've been describing there. So for me, it's this order block here that's kind of capping the market. And actually, let's do that as an actual OB. Right, now, while we haven't kind of progressed away from this can provide us a really, really important point of confluence. And I think we've got this drawn on the lower timeframes anyway, but we'll add it for the moment. Now, when we came into this level, a few things kind of struck me. One, I felt like we had a really, really hot run up here. So it felt natural that price would kind of rebalance in here. This is the weekly fair value gap. So actually, let's just pop on our daily as well so we can get that extra bit of context. Right, so we can see our daily fair value gaps below. We'll ignore this order block just for now because it's too far out of price. But we see we had a similar theory before, right? Weekly fair value gap, daily order block, price was driven into this. We took out all the liquidity resting below. Whenever you see an alignment of lows like this, yeah, you'll hear people refer to them as equal lows or relative equal lows, right? The same way that we kind of had these here, these equal highs, right? Whenever there's that kind of level, it can look very much like engineered liquidity, right? So as price runs that, you can imagine how there's algorithms, how there's really, really, really big investors can target those areas. So it's always worth kind of monitoring them, in my opinion, as well. That does all make sense. Thanks, Erica, Ray. You're welcome, mate. James, it's coiling up. It is. It's really coiling up. Now, in terms of coiling up, some of the moves, and this is what's so clever about how the markets work, and this is why they always keep you guessing, right? Because from here, people think, right, we're compressing in this level. If we're going to go, we're just going to get this big move, this beautiful retest, and then we're going to go higher. And how many times do we not get that, right? That's what we want to play for, of course it is, right? But in the same vein, more often than not, you're going to get people trying to get people offside in this, right? You hear about the term short squeeze, long squeeze, etc., right? And it means that people that are long in here, they don't want to see price pulling back down. It's threatening their stop loss. They're starting to really question stuff, all right? So for me, the real killer move here is we've been consolidating for ages, have a deep aggressive drop down, yeah, into this level, or even more ideally into this level, because it'd be getting down into the discount section of our range, right? Before then getting a pretty aggressive recovery and moving higher from here. Now, why would that make a lot of sense to me? It would make a lot of sense to me because I think people are just getting so bored and frustrated with Bitcoin at the moment on the medium and higher time frames that as soon as this thing shows a key move in one direction or the other, I think you're going to be able to induce a lot of buyers or sellers. I think if we start having strong moves down, people will say, yeah, fine. I knew it was going to go short because we've run this level, we've compressed here for ages. This thing's going to zero. Or you see the break above and people go, okay, yeah, brilliant. I knew this was going to happen. We've had this big expanse above. Prices maybe shot up to here straight away. Everybody goes long and then you get a move like this, right? Why? Because for me, I'm always looking for what's taking out their clear and obvious liquidity. Yeah. Where's the obvious plays here for major players? Big institutions are going to be targeting this high here or this little internal high here or maybe this one here, possibly. But we've got this massive untapped weekly high sitting above us, right? Which I'll just try and scroll back to. So, if I was smart money here and I was somebody that was short from here and my stop loss was above here, my obvious target's going to be something pretty clear and obvious below. So as we then get into a bullish phase and we're saying, okay, well, that's where the major sellers were before. Price gets pushed up into this area. How do we know they're not going to be there again, right? And that's where we would then use and implement our lower time frame setups as well. One of the things I learned from Crypto Casio is looking for majority loss. Nice. Yeah, exactly. Or there's a really good Aussie trader, actually, a guy I came into contact with a few years ago called SMFX. Really chilled out dude, very similar kind of liquidity views on the market. I think he's got this brilliant statement. I think he says, just look for the area that causes massive damage, I think he said, or the area that most people can have damage inflicted onto them. Yeah. Meaning that if everybody thinks that we're going long above here, yeah, then the chances are there's players out there with the capital to make that move happen. And then if everybody's going long here, yeah, they can take all of those buy orders, fill them with sell orders, and then dump the market, right? Taking all of that liquidity and then pushing the market where they want it to go to. So what we can do here then is we can drop down onto lower time frames, right? And this is where, excuse me, we'll start to clean the charts up a little bit, but this is where our range plays as well come in, right? So let's just pop our weekly levels off for a minute. I don't think that will get rid of too much for us because we're in just a much more kind of condensed space right now. So yeah, here we go. And then let's put on our 4-hour inside bar here. What you'll notice as well, quickly as we put this up, look, here's our daily order block, right? Look how it lines up with the low of the mother bar and the order block with the top of the inside bar. Confluence like that really, really helps us kind of stick with our game plan, right? But also as we put the weekly on as well, we can see these other levels line up with like mother bar high with this key weekly level that's suppressing the market as well, right? So when you look at these things and you look at the TA, don't have too much stuff on your charts, right? But the stuff on your charts has to be relevant, has to have importance. So using exactly the same principles again as we have done before, why did I think the price was going to push lower? So I don't think it's overly clear at the moment in terms of price action, right? But we are just ranging in here, yeah? So what do we get? Price comes up, deviation, price sells off, right? To the middle of the range, right? We would draw our midline in here as well. Ultimately, price comes up, deviates again, steps back in the range, this time all the way down to the inside bar low. What happens? Deviation, price steps back in, midline first, yeah, price cools off a little bit, ultimately swings the high, What have we got here again? Deviation, right? Now, this was a very, very minor move below the inside bar low, but it left a very, very clean low, yeah? So that can be a target for us. But just talking about this in terms of how we're looking and how we overlay the TA that we did on the higher time frame, right, is we're saying the same things, right? If we see a bearish fair value gap here, yeah, on the 4 hour, and then we see price draw back into this fair value gap, right? Then our plan is that we go short there, yeah, targeting liquidity below. So we see how the plan doesn't really change, right? It's just applicable per time frame, but we need to overlay the high time frame bias. At the moment, our high time frame bias is unclear because price is consolidating. We don't have any clear reads. The cleanest time frame that we can learn from is here, right? So same thing applied. Price moved above here, we deviated, we broke down, right? If we're now bearish here, what do we want to do? We want to see a structure shift. So we took out these lows after setting a lower high. So we're now bearish. We mark the bottom of this order block on the H4, and that's being respected, meaning that we're now delivering price, yeah, short. So we're targeting the lows. We set this very clean low, which did take out liquidity resting below here and the inside bar low, right? So when price draws back up into this area, our bias is short, but we respect structure, right? So what does that mean? Let me show you on an executable time frame. We've got our red arrow on there, right? So why do we respect structure? Because there's no good us having a theory on the high time frame or the medium time frame that we want to go short here, but we've got bullish market structure, right? We don't want to fade that. We don't want to fade that. So as we step into here, yeah, we can see here this is the start of the New York session. So when the New York session starts, I want to see a clear run on liquidity, yeah, meaning the market heading in the opposite direction of what my bias is. Just wait a few more seconds for that to load. There we go. Right, so the session opens. Now I want to see a clear and obvious move against liquidity, right? So we see we've got these highs here. And you see how price pumps up here. The idea is trap people, get people to go long, get people to act impulsively, yeah? People are watching the session, people are starting to see price move. Okay, look, we've swept a low here, yeah? We've broken this high here, and now we're traveling up. Boom, people start to get long. However, in my opinion, the error here in judgment is by not kind of looking at that high time frame bias. If you were going long here, you need to expect the fact that you're running into some really, really key resistance. Now, you could trade this on the low time frame, and I know some exceptional traders that do it. My boy Trader Dank is one of them, who I know Touche will know really well, and Ray as well, I imagine. And he's just this absolute sniper, right? And now he'll know he's counter trending this. I used to do it with him. We would take really low time frame trades and that, and counter trade a higher time frame trend. But you don't really need to. There's always a risk that you overtrade. You know, so many people I speak to are just like, I didn't get a trade today, or I want to trade now. Just wait for your TA, wait for your systems to step in, because you get a tiny scalp here on the low time frames. But then when you come up here, there's always a risk that you kind of ill prepared yourself a little bit, right? So what do I mean by that? Well, when I see this move higher and then I see price start to break down, well, then I want to be in a position here where I'm ready to act, right? So what do we get? We get the run up, we get the liquidity taken out. We set our low, lower high, right? Now on the break of this low, right, we're transitioning then into bearish price delivery, okay? So there's a couple of different entry techniques we can use here, but one of a really, really good one if you're starting out is looking at what's known as the displacement leg, yeah? So you see this here, that's the move lower that takes out market structure, which is here, right? So here we're now moving into a bearish state of delivery, right? Now, we can do one of two things here, or one of several things. Because we don't have an immediate sweep here, an immediate high taking out, that rules out using a breaker, all right? So I'll cover that in another session maybe, or later on if we see one. So the ideal thing to do here is to draw your premium discount range. Let me just draw that in a way that's a little bit clearer. So again, this is an ICT concept, right? So always recommend going to the source on this, but basically the principle of it is that when we take a leg of a range or we take a trading range, right, a dealing range, so this low to this high, or this being a displacement range, is this high to where price displaced down to the low and then starts to correct. So you're measuring it from here to here. The principle is that we favour long setups from discount and shorts from premium. Yeah. Meaning that when we look at this as a risk to reward perspective, that makes a lot of sense. It also makes a lot of sense to me in terms of how algorithms and bots can measure these type of moves and also then decide on entry points. So what do we need here? We need a fair value gap, an order block, yeah, or sorry, a fair value gap or an order block in this area. Yeah, that then becomes our target. So we don't have an FVG. You could drop down onto the lower time frames as well, remember, if you wanted to do that. But let's just stick with the 5 minute for now. So we have this really small one here, so we can use that. Or we could, and I don't want to teach you bad habits here or inconsistent habits, but for me, if I also see a larger volume, as in a larger bodied candle in the very same vicinity, then I'll often give favoritism to that, right? But this is also equally valid. And in fact, to teach good practice, to take the lower one, because then you have a higher likelihood of the trade triggering. At the end of the day, if you're wrong on this one, you'll be wrong on both, right? But our plan is that if we see price break structure to the downside, so we've met our first parameter, we've seen the big run on liquidity, we're now monitoring, we get our price breakdown, we have this move lower, right? This is our displacement leg. So we're targeting either an order block or a fair value gap in the upper portion of this range. Very, very simply, when price closes down here, when we set this up close candle, it starts to move up. This is when we draw our range, we identify our target. This target here is where we would place our limit order. Stops above the prior swing high, always a few pips above. And then we're targeting clear and obvious liquidity, yeah, which is this low. I would also be monitoring this low in case maybe I'm wrong on this. Yeah, maybe actually price is reversing here. We never really know, right? We have to just play the odds. But if that happens, you can always move your stop loss to entry around here. But this gives you a nice kind of 3.2R trade, right? So does that make sense to everyone, just in terms of how we can use kind of fair value gaps, order blocks, and that to give us that kind of medium and high time frame confirmation? And how we can actually just then overlay ranges, and traditional kind of concepts of support and resistance to utilize that, and that they can work in harmony. Because I do hear a lot of people kind of saying like, oh well, either support and resistance doesn't work, or a lot of ICT purists. And I understand where they're coming from. The training and that is all based around the interbank algorithm and the delivery of price, which I fully agree with. However, for me, support and resistance just really indicates on a chart where the buyers and sellers, or where the pivots are on a chart, right? Where something's either undervalued, overvalued, whether it's getting acceptance, right? So what does that mean? It means that obviously Bitcoin's considered a buyer down here. Look, buyers, 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 right? Fine. It also means it's not considered value above here. I know this is a small sample size, guide, but just to give an example. Why? Price sold off here, sold off here, sold off here, sold off aggressively here, right? Meaning that price at the moment doesn't really, people can't work out what is the value price for Bitcoin, right? If it breaks out and holds, people think, right, okay, well, there's obviously people willing to buy it at a higher price. Therefore, we can look for higher prices. And then with this one, you're saying, okay, well, actually, people sold off heavily here, so people don't consider it value here. So where am I going to sell to? I'm going to sell back down here where people were happy to buy again. And actually, that's what we've seen here. However, this reaction here has been very weak, in my opinion. So I think we've lost the inside bar high really quickly. We've engaged with the low here. We're now consolidating above that. I think the likelihood for me is that we drive price down lower, and very much looking at kind of this low that was set here. Obviously this low as well, but ultimately the mother bar low, which is a little bit further down. All right. James, funny. I know you mentioned ICT dealing range, but I didn't catch what channel. Oh yeah, sure. It's if you just type in like ICT crypto, or I studied his stuff a long time ago, right? But it's I know it's all good stuff. I do still kind of keep current with bits and pieces, and I'm fortunate to know some really, really good traders in that space as well. But yeah, I think his Twitter handle is the real ICT, or I'm the real ICT. but you'll see hundreds of thousands of followers. I think his current picture is just kind of a black and white one with a kind of guy in his 50s with a beard. He certainly wasn't that old when I was learning from him. But yeah, you'll see or you'll get a handle of it. If not, mate, reach out to me through the Nest or reach out to me on Twitter and I'll make sure to link you through to all of his stuff. All right, bear with me 1 second, guys. I'm just going to blow my nose. Just going to pop you on mute. Perfect. Yeah, you're very welcome, mate. So there's a lot of kind of imitators out there for ICT, right? But I think what I would recommend doing is if you really want to deep dive it is go into his core content, yeah, from the 2022 mentorship. But if there's other bits like this that interest you, just type in, for example, ICT dealing range, yeah, or ICT order blocks, and then it will take you through to the specific videos. But overall, really, really good person to study. Always recommend him. Always recommend Trader SC. And my brother Trader Dank as well. You know, obviously, I've got the best fam I could wish for at the Bird Nest. I'd always recommend everyone to go there, but at the same time, it's up to you. I would just say come and check the different places out. Make sure you feel comfortable there. Make sure you feel set, and you've got a good place to learn and educate. And then just work really, really hard. So, and thank you, Erica. Hit the like button, guys. Yeah, please do smash it if you've got. If you're enjoying the stream, and also leave some comments if you're not, or if there's some other bits and pieces you want to cover. You know, we typically leave Mondays for education, right? That's the real kind of focus on Mondays, kind of deep diving into that, looking at how we can kind of ascertain bias, and then execute on lower contents as well. Loves TD content prices. Nice. So cool. I mean, I don't really have much else specific I wanted to cover with you guys. I just had a lot of messages last week about this idea of people getting really confused with bias, especially at the moment on Bitcoin, because we're kind of in this range, right? And look, price will range a lot more than it will trend, right? If you go back and just look statistically, historically, etc. So most of the time we're probably ranging on some kind of time frame, or someone like Dank, for example, or SC would tell you that. You know, we're always kind of in a range. So don't be afraid by them. But I was going to say, if you see prices in a range, yeah, whatever method you use, whether you're using inside bars, so highlighting an inside bar pattern on a higher time frame like we've done here with the daily, yeah, this is just one candle, and then a smaller candle setting our inside bar pattern, or even if you were doing this by eye, you know, you can sit on here and just play around with levels. So let me just get rid of that for a second. So as you're looking at it here, and even this order block, you know, where you start seeing this emergence of lots of wicks, yeah, you can try and just find yourself a level, right? So you can zoom out a little bit and you can go, okay, well, is this any clearer on a daily? We're looking for a level that's really kind of suppressing price. Try and kind of tie that back then to a specific low. And then you can just play around with it. I mean, look, when you see all these wicks here and you say, okay, well, what's kind of capping price here? Right, you know, you could easily just say, okay, well, this low actually, draw that low across, make it a little bit bigger so that we can see it. And then if we were doing the same with the high, well, I think you'd kind of say, well, what's kind of maybe even this one? Yeah, I mean, it's aggressive, right? But as we look at it, and again, using by eye, something stopped the market here. So resistance, then deviation, yeah, big sell off lower. Deviation again, takes out liquidity above these highs, sells off lower again. Deviates the lows, steps back in, up to the highs, small rejection, back up, deviation again, steps back in, down to the lows. So we can see how those levels have validity, right? And then you can always take a Fibonacci. As we've done here, focus on the midline. Now we'll draw that in. We'll just make that a dashed line as well. And now if you're ever in doubt, you can then just go on to a lower time frame and say to yourself, all right, well, what does it look like on a 4 hour, on a 1 hour? How respected are these levels being? Yeah. And then as we zoom out here, we can see if we'd even let's just say that actually price had got to here before we'd set that range. Yeah. Now, what we know is price deviates, excuse me, and our plan is to always trade to the far side of the range. If we deviate, step back in, we target the far side of the range via the midline. right? So deviation one, midline, decent trade, okay? Price ultimately doesn't get continuation. We either get stopped out in profit or price runs the high again. This time we do target that, does make it to the middle, does make it to the bottom, deviates the lows, price comes up to the highs, back down, holds this level, right? Bit of a sneaky move here because we would have been targeting higher, but ultimately it does an over, under, and then has a really, really powerful expansion. Now, price, as we can see, has then run the liquidity above these highs. So for me, what I would have wanted to see here is price come down here and start to consolidate a little bit here. And then on the lower time frames, yeah, we'd have that run up and then we'd be monitoring the lower time frames, right? Looking for that market structure shift, right? And then price to move higher. That would then give us the opportunity to get involved. However, we didn't. We see this big aggressive sell off back down to the lows. So when we then ran the lows, our target then becomes the midline. And we can see that we actually rejected before the midline here. But what would have helped us in this situation? Knowing the fact that we've got a midline just ahead of us, that we've got the 4-hour fair value gap that we discussed previously. So we see how we can overlay these points. Then when price pulls up into here, we're certainly not looking to long it towards the midline. You know, we hope that it interacts with the midline, but we know very well that it could reject almost as soon as it touches the fair value gap, right? So our bias is bearish, a high time frame bias. We've run the high, targeting the low. We've swept the low. Price is now failing to build momentum here, rejecting quite heavily at the fair value gap. We retain our bearish bias. But if we get above the midline here, yeah, again, lower time frame, find ourselves building structure, then we can look for prices higher up. All right, guys. Look, I hope you found that interesting today. We're going to put a pin in it now. It's been going for about 50 minutes, so just a little bit shy of the hour mark. But Wednesday, we're going to be back to focus on our altcoin Wednesday, right? So if you've got any coins that you want to take a look at, remember this does cover across into FX, legacy markets as well, right? So we can always take a look at those. But if you have got any altcoins that you're looking at or you want any advice on, please do pop along if you're free. Or drop me a message on Twitter or something, and we'll make sure that we pick a good sort of 4 or 5 to cover for top down. All right. Nick, lots of lessons to be learned. Awesome. I'm glad you found some value in it, mate. I had a nice long on short term over the weekend, but let it ride for too long and eventually got stopped out being away from the laptop. Still learning small trades. No, but that's a really, really, really interesting point. Brawl, you beauty. You didn't tell me you were on the stream. I would have cleaned my language up for you. No, actually, I think I was really good today. Although anyone from Dank's Country Club you could swear like every other word and you'd probably still not outdo Dank on a good day. That absolute legend. Great session. Thank you. Awesome, guys. Yeah, so just to address what you've got on there, Nick, quickly, it's a really, really good point I think a lot of people can learn from. So trade management, right? Now, and this isn't to pick on you. I think absolutely everybody does it. But just to move to a lower time frame very quickly, no matter what time frame of trader you are, you can always use the current price action to manage price, right? So remember what I said, and let's look at this build up here just very, very quickly, and then I'll let you go, right? So what did we have here? Bullish order block, right? What's it doing? Being respected, so we expect continuation. Bullish order block, being respected, we expect continuation. Bullish fair value gap. What happens? Price dips into it here, we get continuation. Now, what's our first warning sign here is this, right? That was a terrible, terrible, terrible line. Hang on. Let's see if it actually worked this time. There we go. So this, right? That's our first warning. Why? Because price has set this high, come back down, right? Again, holding this fair value gap though. So we'd look to long from in here, right? But then ultimately price starts to break down. What happens is we then shift structure here by taking out this low, yeah? Then we're moving into a bearish state of delivery. So we then want to see the bearish order block hold, which it does. Now, when we start breaking down in this area here, let's say, for example, that you were long down here. That's your entry, yeah? And you're taking up here and you're sure you're going to get higher prices. Well, while this is in a bullish state of delivery, you don't really need to worry about it, right? But what I would do is I would just start marking out these order blocks. Yeah, so let me actually just clean this up a little bit. Because as we come up to here and we break down, right, we can then say to ourselves, okay, well, now we've reacted bullishly from that fair value gap. We would want to see that hold, right? So we'd want to see this bearish order block hold. So that's this down candle here, measured from the top of the body. Price reacts into it a bit weak, or maybe, you're outside of trading hours here anyway, certainly for me. Then when we lose this, right, and we lose it quite aggressively, I'm then looking for these up close candles. And the moment that we come up here, right? I mean, we don't even get to the order block here, right? We break down before. Then, as soon as we start to close and we start to move below this level, you can either start to trim some of the trade, you can protect the position. But at the end of the day, you've got yourself out here. And don't be afraid to take profit, guys. Just make sure you're getting to a key level, right? And then once you get to there, trim some profits. And I would always suggest moving your stop loss up to entry. Take some money for your fees. That way, if you're wrong and you're not getting the screen time, you can step away. But really, really great point, Nit, and definitely not a criticism, mate. Just a very good point that I think offers a lot of value for everyone. All right. GOT, thank you. Been practicing your analysis. Not sure I'm there yet, but very grateful for sharing. You're very welcome, mate. Any more questions, please do let me know. Forex, as always. Brawl, I always get a feel that you're always there, but always there in spirit as well, my friend. Really do appreciate you. Brawl is a tremendous fashion designer and has just this wonderful eye for fashion. And when I was very lucky enough to go away on a little jaunt with Dank, helped me put together an outfit that made me look a lot sexier than I am. So a real superstar in my eyes and one hell of a trader. Whack, hello, mate. Yeah, a little bit late to this one, buddy, but you're normally there. Yeah, they'll all be on recording very soon as well. Really good bit of alpha there from Brawl as well. ICT video, one setup for life, is easy to watch. Yeah, and it gives you a really good overview as well. Awesome. Look, guys, thank you so much for your time today. Really do appreciate it. Loads of love to you, Brawl, and everybody else on here. I mean, we had so many people on the stream today. It's just been amazing. Craig, Brawl, Whack, Django Blue, good to see you on here again. Erica as well, obviously, James. Becoming a real regular on here too. GOT, great to see you again. Nit, obviously, as well, Yakuza Kana. Ray, brilliant to have you across. I hope you enjoyed it, mate, with your time on here. Ricky as well, good to see you again. Super Shogun. Touche as well, absolute soldier, becoming a regular on the stream. Seb, Ahmet. Ilcho as well from early on, new person to stream. Good to see you. And MM as well, of course. Apologies if I've forgotten all of you. Nothing but love for you all. We are going to be back on Wednesday. If you're around, do ping me if you'd like me to take a look at any particular charts. If not, then we'll do our usual. We'll start with ETH and we'll find a few gems or anything that's got any interest. And we'll also cover a bit of Forex as well. Erica as well, if anybody else is interested. Obviously, I trade that a lot more now, so more than happy to share. All right, guys, have a fantastic week. Trade safe, trade smart. All right, and I'll catch you guys on Wednesday. Take care.